Hello everyone. I would like to invite you to a detailed discussion of the situation we have on the BTC to USDT pair chart, taking into account the movement from the last price low to the current high. Moving to a 4-hour interval, we will start by using the yellow line to determine the main upward trend line, above which the price remains from the established low after the previous bull market. Then, using blue lines, we will mark the upward trend channel, where we can see how the price has broken down. However, the price drop after leaving the channel was not as strong as usual. A sideways trend began quite quickly, and when we extend the lines of the lower border of the upward channel, we can see how the price has now returned just above it. And here we can use the purple lines to define a side trend channel, from which the exit from the top resulted in a price increase at a level similar to the height of the specified channel. Going further, it is worth determining the similarity of price movements since reaching the bottom. And here we can notice that from the bottom of the price to the first peak we could see an upward movement of about 62%, which lasted about 82 days. After reaching the first peak, a correction began, in which the downward movement exceeded 22% and lasted for about 22 days. The renewed movement from the bottom to a new peak resulted in a movement of approximately 58%, lasting only 35 days. After which the price began a correction similar to the previous one by approximately 20%, lasting this time 62 days. Then the price started to increase, but it ended near the previous peak at which the price was rejected, giving a drop of about 21% again. Interestingly, the length of the declines is similar to the previous correction and lasted 61 days. After which a new period of growth began, lasting until today, and is currently over 53% and lasting 73 days. Looking at the similarity of these movements, there are many indications that we are approaching the moment of another recovery, and looking at the movements the price has made before, we can assume a correction at a very similar level of approximately 20 to 23%. However, before we start the next downward move, we can see the price increase around the zone from the current position to an increase of about 62%, giving the zone from $38,077 to $40,183. Moreover, in a similar way, we can mark the probable downward threshold to which the price may fall in a new correction and again mark the zone from the level of 20% to 22%, giving a zone from approximately $30,497 to $29,588. Let's now move on to the interval of one weekend, during which we will go to the previous bull market from 2017 to 2018, and here, using the Fib retracement tool, spreading the tool from the peak of the bull market to the very bottom, we can see that the renewed upward movement resulted in an increase around the zone from 0.5 FIB to 0.618 Fib. What's more, a similar upward movement from the bottom occurred after the boom at the turn of 2013 to 2014. Before the halving in 2016, the price increased in the same range of 0.5 FIB, 0.618 FIB. Returning to the current cycle, when we use the Fib retracement tool in a similar way, we will notice that the price is below the previously mentioned range of 0.5 FIB to 0.618 FIB, giving a zone from $42,340 to $48,649. But this level was previously reached before the halving, which in this cycle falls around the end of April 2024, which from today gives about 155 days for the price to reach these levels. Now let's go back to the one-day interval and the interval of the current upward movement. At this point, it is worth looking at the CHOP index, where we have a lot of energy collected to make a new move. When we look at the RSI indicator, we will see that despite the price maintaining, the indicator has recovered towards the middle of the range, thus creating space for a possible new increase. But in this situation, we will also omit to take into account the stock indicator, which indicates a strong breach of the upper limit, which may result in the opposite effect and translate into a price recovery. We can also turn on the EMA Cross 50 and 200 indicator, where we see that the price remains in a strong upward trend. However, we will see a similar situation on the EMA Cross indicator in the range of 10 and 30, which also confirm the short-term upward trend. While EMA Cross 50 and 200 indicate the continuation of the upward trend since the price returned from the bottom, the range of 10 and 30 is worth watching because it may indicate the place of reversal of the trend from the current upward to downward trend. Technical analysis is provided by a third party and for informational purposes only. It does not reflect the views of CryptoDaily, nor is it intended to be used as legal, tax, investment, or financial advice.